Remember how tough it was in 2022 when Bitcoin dropped to 15.6k, FTX and Luna crashed with a dramatic 76% drop in total value of the crypto market. But since then, we have technically been in a bull market. You might be like, Jemmy, Bitcoin is still well below its previous all-time high and I don't see people trading a picture of a rock for $4 million. Well, take Bitcoin as an example. Bitcoin made a huge comeback, going from a low of 16k all the way up to 43k in 2023. That's more than 2x jump in its price. Ethereum follows suit, doubling its value from 1200 to 2300. By the end of 2023, the crypto market had not just recovered but flourished, skyrocketing to a total value of 1.6 trillion from just 760 billion. So today, we are delving into some intriguing on-chain data, starting with a fascinating insight. Over 76% of circulating Bitcoin is now held off exchange. Bitcoin on exchanges is often earmarked for trading, but off-exchange Bitcoin typically signifies a commitment to HODLing. Therefore, this would be our great first sign of a bull market. And this is also supported by the growing number of individuals accumulating Bitcoin, signaling a clear sign of increasing confidence among investors in the long-term value of this digital asset. If you're still not convinced, you can take a look at the Bitcoin hodler's balance because that's an excellent indicator for measuring market cycles. On-chain data from Glassnode have revealed a trend reversal wherein long-term holders are feeling really optimistic about a potential Bitcoin bull run. They are not just sitting back, they're actively adding more Bitcoin to their stash. And if you're thinking that's probably just some whales snapping up Bitcoin, then you might be wrong, because smaller investors have been quietly building up their Bitcoin holdings too, especially since the FTX collapse. They have added a whopping 96,000 Bitcoins to their collections, hitting an all-time high in the balance growth. These small investors, who each hold less than 1 Bitcoin, now own over a total of 1.2 million Bitcoins. To put that in perspective, that's 6.3% of all the Bitcoins out there. It's amazing to see how everyone, big and small, is getting into the Bitcoin market. My next reasoning for a bull run is the rate cut. Interest rates play a crucial role in the world of investing, including in the crypto market. Looking ahead to 2024, there's an expectation that US Federal Reserve will reduce interest rates by 0.75%. This reduction in rates is likely to have a widespread impact, benefiting not just potential homeowners and housing market, but also reducing costs across the economy, including business investments. High interest rates have been losing their effectiveness on the market, and the cost of borrowing influences all investment areas, including stocks and cryptocurrencies. The anticipation of rate changes alone can trigger market reactions, and crypto prices are also affected by the same factors that influence traditional retail stock investors. An interesting aspect to consider is the potential impact of a rate cut on different sectors like RWAs and DeFi. While a rate cut might cool down the RWA sector, it could lead to increased usage of DeFi, especially given the attractive yields some DeFi platforms offer. For instance, if the US cuts rate and DeFi offers a 10% yield on stablecoins farming, investors might prefer DeFi over RWAs like tokenized treasury bonds. But this is just one theory, since RWA is not only about tokenizing bonds, but also tokenizing assets like real estate and art, and a low rate environment can definitely encourage a risk-on mentality among people. Next, then, one of the most historical reasoning behind my bull market case is the ETF approval. The crypto world has just hit a major milestone, with the SEC approving 11 spot Bitcoin ETF applications. This long-awaited decision marks a turning point in the crypto investment sphere. On its very first day, these US Bitcoin ETFs witnessed a massive trading volume of 4.6 billion, showcasing strong investor interest and confidence in this new investment option. The impact of this approval is significant. Standard Chartered predicts that spot Bitcoin ETFs could attract 50 to 100 billion inflows by 2024, possibly driving Bitcoin prices to an impressive 200k by the end of 2025. The situation is equally dynamic in Hong Kong. While they haven't approved a spot ETF yet, they have started accepting applications for such ETFs, indicating a significant shift in their approach to crypto regulation. This move is particularly impactful given the substantial volume of crypto market activity that originate from Asia. Hong Kong is even considering both in-kind and cash create model for Bitcoin ETFs. This decision marks a significant divergence from the US cash-based approach and sets the stage for a potentially transformative era in Bitcoin investment. The in-kind ETF model typically allows investors to exchange their existing Bitcoin holdings for ETF shares. In this context, it means that investors can redeem their ETF shares for the actual Bitcoin, making the process a two-way street. This model appeals to current Bitcoin holders looking to diversify portfolios without transitioning to fiat currency. In contrast, the cash ETF model involves buying and selling ETF shares using traditional fiat currencies like HKD or USD. The cash model is more familiar to traditional investors and is more accessible for those not currently holding Bitcoin. Last but not least, we also have Ordinals. This is a new buzzword and has been catching everyone's attention. It is a new way to embed unique data like NFTs directly onto the Bitcoin blockchain, which has led to some noticeable changes like more expensive transactions and slower processing times. In 2023 alone, we have seen the average transaction fee skyrocket by up to 25 times, and the Bitcoin meme pool is facing levels of congestion like never before. But it's not just Bitcoin feeling the heat. Other layer 1 blockchains such as Avalanche, Near, and Solana have also seen spikes in activity because of Ordinals inspired tokens. Toncoin even experienced an outage due to the surge in these transaction volumes. So that sounds like a bunch of negatives for Ordinals, right? But here's a twist. High fees might actually be necessary for Bitcoin survival. Why? Because of Bitcoin's HODLing event every 4 years, which effectively doubles miners' cost each time. Interestingly, these inscription transactions have been thriving, with miners' fees revenue hitting 25%, a level that's almost on par with the highs seen in the 2017 to 2021 bull market. So that's a lot of information. Time to wrap up this video. It's clear that all these exciting developments are pointing towards a truly unique moment in the world of crypto. We're not just entering any bull market, we are stepping into a once-in-a-lifetime surge in the crypto space. I'm proud to say that Bitcoin, through all its ups and downs, has stood the test of time, proving its resilience even in the high interest rate environment. But as we navigate these exciting times, I want to leave you with some key reminders. Always remember to take profits when you can. It's easy to get caught up in the high, but smart investing means knowing when to cash in on your gains. So stay humble. No matter how much you know, there's always more to learn in the crypto space. Keep educating yourself, stay updated with the latest market trends, and never stop learning. That's it for today's content. If you want more regular updates from me, do follow me on my personal Twitter and Instagram, and I'll see you guys in the next one.